Good morning, traders. Welcome to this video update on the euro dollar and pound dollar. My name is Chris Forsyth from Elite Currency. Let's take a look what to expect of the second part of this week. But before we do that, wanted to let you know that our ECS portfolio method is ready and offered on our website. We've been trading it ourselves for 2 years and testing it with various situations more intensively the last 6 months. And it's ready. We've added it to our website, products. Go to elitecurrency.com, click on products, click on portfolio ECS. There's all the information you need. There's also a video that has been uploaded to YouTube that explains it in more detail. And feel free to go through that. I don't want to take too much time of this video, but very good results that we've had in those 2 years, and very excited about that. And you can follow all of that and join, of course, if you want, with the capital you can afford to risk in this page. So hope to see you as a member or as an investor, I should say, or otherwise, of course, feel free to follow the results and decide when and if you want to join later on. All right, so euro dollar 4-hour chart is basically trending lower, broke the support trend line, broke below the 88.6 fib, and stayed below the 21 EMA, and has made a lower low. So the bullish ABC zigzag or 1, 2, 3 pattern to the upside that I had in mind is invalid and will prove to be not true. Okay, so that was incorrect. In fact, the bearish analysis, the bearish variant is active now, and will probably see price push through to lower targets. But in any case, even if it turns up right here, right now, the bullish scenario that I had in mind is just not happening. All right. So what that means is that we're probably looking at a bearish ABC or 1, 2, 3. This being an A, B, C, or a 1, 2, 3. In any case, this bullish push up was part of a correction for more downside, and that can happen sometimes. You get caught off guard because of this strong impulse. It looks like a change of direction. It looks like a bigger correction, but it wasn't. And I suspect that in that case that it may be a tricky wave 4. Let's put the fib on from here to here. No, that cannot be an ABC zigzag. It cannot be an ABC pattern like that, because this went too deep compared to this swing. Some ABC zigzag pattern in that case probably usually doesn't happen at this spot in the wave 4, but it can happen. It's not impossible. So that looks like a wave 4, and of some type. This is probably wave 3, and we're probably going down of a wave 5. And it could be wave 5 of wave 3. It could be wave 5 of wave C. We'll have to see. But further pushes lower seems likely at this moment. And the price has already made a break below the triangle pattern here, below these flags as well, and has made its way steadily lower. So continuation at this moment further down, I think, is likely, and I think that price will probably hit 116, bounce maybe there, or then go to 115.80, and maybe even make it all the way to 115. But for the moment, I think there is sufficient space for follow through to the downside, and I think that this is looking like a breakout actually lower. But personally, if I would be trading this to the downside here, I would put the stop loss probably above the 78.6 fib or 88.6 fib to give it, or even the top, to give it sufficient space just in case it makes it to the 61.8 fib or 78. But otherwise, it looks like a breaking spot. It looks like a break, pullback continuation, I should say, with the 116 probably as a main target for the moment. We could hit 116.50. Of course, these are minor targets, 116.25. And on lower time frames, of course, there could be pullbacks. But ultimately, on an hourly chart, I would expect that there should be lower lows within 5 to 6 candles. If we don't get lower lows, 5 to 6 candles, it could indicate a bigger type of correction on this time frame. Once it gets if it gets to those zones, then we might be looking, of course, at target being hit, and we have to have to see how price responds to those targets to evaluate what kind of larger pattern we're in. As you can see, the 50 fib of this swing is at 115.40. That could still be an important level for the bulls. So a bullish bounce could still take place there. But to be honest, if 115 breaks or 114.75 breaks, a break below the 50 fib would certainly make this less likely this is a wave 4, and more likely that this is maybe more of a downtrend, even on higher time frames. All right, that's my view. I have nothing really to add to that. Pound USD, we got the bullish break, but it didn't hit my target and failed to make a higher high and failed to hit the 50 or even 61.8 fib. And what we instead had was a flag, a fake out of the flag, fake breakout of the flag, and instead we had a break below the support trend line and a break below the 20 EMA right here with this red circle candle. And then even a break below the horizontal support with this candle. And that, of course, flipping and shifting the perspective from bullish very quickly to bearish with these kind of breakouts to the downside. Moving averages were also aligned to the downside. So in that case, these breaks below support fully aligned with the trend in that case, and that would make it certainly bearish. And price has made it to the minus 272 target. Okay, that's a fib on the 4-hour chart of this swing high, swing low, where price respected the 38.50 fib zone. Also, the long-term moving averages on the 4-hour chart are aligned to the downside. So that means that maybe the descending wedge pattern finished early, with this being an E, A, B, C, D, E. It was a smaller E than I expected. That's one potential version. I think not, not impossible. It looks quite likely that could have taken place. I thought that wave E could go a bit deeper with an ABC pattern, but wave E's are always tricky and always could end sooner or later. They're not related that strongly to any particular fib level, so that could certainly be a wave E in my view. In any case, after double top, strong momentum down, consolidation pattern, there is a break with a clear daily candle close below the support. And right here with this daily breakout. So I know we had a 1-hour flag pattern. So I do think a continuation lower is likely as well. And let's see, targets could be, the only thing is that 135 round level is a bit annoying right here. And the wave 7 is quite close by. So would probably rather wait for a little bit bigger retracement, to be honest. Maybe to retest the broken support and bottoms here. I might miss this move to the downside if it does move down to 134.25-ish. And maybe even down to 133 and lower. Yeah, I suspect that a move into 135.75, 136 would be a better, this zone right here would be a better point for looking for downside. I suspect that could be some kind of rising wedge if it occurs, and then a bounce there for a move down to 134.75, 134.25 seems more likely, and seems more space, and seems a better trade to wait for that. Here it's a bit chasing it, I think, and it's too close to 135 and too much downside behind it. Would rather wait for a pullback continuation and bounce. All right, so yeah, basically, the breakout, the main leading factor here, and failure to push basically above the 20 EMA and reach higher fibs, and instead we got the bearish breakout and a clear impulse lower towards the target. Now that price is at the target, I would rather wait for a pullback and bounce. But I think that a continuation lower after that pullback looks good. There could be an immediate push through, but I think that is really a little bit, it's possible, but I just think it's a little bit too risky and too chasing it. Better plays would have been up in here with this breakout to the downside, or this breakout to the downside. Here, I just think it's better to wait for pullback and continuation. Okay, so that is my 2 cents. I'll be back next week with an update. Feel free to check out the ECS portfolio. It's a mixture of systems, it's a mixture of instruments, semi-automated, automated, technical, fundamental news events. So it's, in my view, robust. I really appreciate it. I'm trading with my own money, with more than about 100,000 euros, or even a little bit more. So that speaks volumes, I think, and shows how much trust I have in it. And of course, nothing is set in stone. 2 years of results doesn't mean it's a guarantee, but and nothing is. And that's why everyone, including me, should always trade with first capital you can afford to lose. But I think it's a great diversification for my portfolio, and I'm glad that it's ready and that it's available for traders and investors to join if they have that spare capital and wish to try this, of course. But I'm happy that it's available. It took a bit more time to test everything than I thought, and I thought we would be ready already a few months ago, but rather do it properly and slowly but surely, and not in haste. So that's about it, folks. See you all very soon. Hope to see you as an ECS portfolio investor as well, of course, and wish you all great trading. Cheers. Bye-bye.